Thanks very much for that, Sud. So those are, of course, the oil and gas names which are in focus. We've got Ashish Chaturmohta joining us on the show this afternoon. He's, of course, from JM Financial. Ashish, great to have you on. I'm talking to you after a long time, so good to connect again on air. Let's start right there. I mean, oil and gas has been making all the headlines. Any specific, either tactical trades or any other sort of investment calls in this space, whether it's at the upstream side or the downstream side?
Hi, Subhi. Thanks for having me on this show. Definitely falling crude prices, obviously, there are some direct beneficiaries, but also if you look at in general, it's going to be very positive for the economy, which is 85% dependent on crude oil imports. And obviously, this is to do a lot with the inflation. Obviously, our retail inflation has hit a six-year low, which is close to 2.82. But rising crude prices could have changed the entire dynamics of inflation. But now, since crude prices have started correcting, this is going to be a further positive for India as an economy. Definitely from a tactical bets, obviously, the aviation space looks the most promising, bet in this, because if you look at, ETF prices, if they remain down or they remain low, then obviously the profitability of most of the aviation companies becomes in a significant manner, and particularly Indigo, which has got almost 60% market share in this segment, and adding a lot of more aircrafts obviously is going to see a bigger advantage of falling crude prices. So we have seen a structural leadership position which Indigo has maintained in the Indian market. And also if you look at from a world perspective, Indigo is now the third largest company in terms of airlines by its market capitalization, because of the increased profitability, low cost which it has maintained over a long period of time. And now crude oil correction will be a big positive. So yes, Indigo looks very, very interesting. From a technical perspective also, if you look at, the stock has been continuously making a higher structure and has been in a structural trend. So looks like it is going to move towards 6,200 zone. As a disclosure, we may continue to hold this stock in our portfolio Apex PMS strategy as well.
All right. Hi, Ashish. So Interglobe is a stock that you like. What about hotels? Anything you like out there?
Yes, definitely, Nigel. So we think that ITC Hotels is a stock which looks very promising, because if you look at this company is also trying to do a lot of asset light model, and obviously 90% of the incremental capacity which ITC Hotels is bringing, it's on the asset light basis, which will ultimately lead to a 450-500 basis point jump in the margin profile of ITC Hotels. And if you look at from a valuation perspective, it is trading at 25 to 30% discount to its peers like Indian Hotels. So I think this discount is going to get narrower, and this will ultimately lead to a re-rating in ITC Hotels because of the valuation gap, and obviously because of the jump in margin expansion which this company is going to witness because of asset light business model. So we are expecting this stock to be somewhere close to 260 270 is our broader target which we have for ITC Hotels, and we continue to hold this stock in our portfolios as well.
Got it. Okay. All right. Interglobe and ITC Hotels. Ashish likes both of them. Let's focus on a couple of other names, essentials that is. We have Page Industries and Nykaa. They're in focus. We have brokerage notes that are coming in there. Mangalam joins us to tell us about both these two names. Mangalam, tell us more.
Well, one makes you look good from the outside, one makes you feel good from the inside. That's what we said about Nykaa and Page Industries, right? So Nykaa is in focus because CLSA has initiated coverage. They have an outperform rating, a target price of 229 rupees. They say that the beauty market is good, and in that, Nykaa's market share is actually quite compelling. And add to that, they have potential to grow in high teens over the next 5 years as well. The only fly in the ointment is Nykaa Fashion, which has not grown as fast, and they believe that the differentiation here is very little given the crowded space and Nykaa's late entry out there. But they believe that the beauty business can continue to support the growth of this business so long as fashion drags limited. So you have growth and profitability for the beauty business, which will be key drivers, which would lead their EBITDA expansion by almost 310 basis points over the next 3 years. The other risk that they put on the table is slower than expected growth and faster scale up of competition. Nykaa is lower in today's trading session because if you look at the last few days, the stock has been buzzing around. So maybe some bit of profit taking that's taking place out there. Page Industries, on the other hand, Goldman Sachs likes the company. They say that it's a buy and a target price of 52,000 rupees because they've done their analysis across all the listed players and they believe that, the listed innerwear players have seen their inventory levels come down. So industry level inventory is normalized, which implies the next 5 years hold better growth prospects than the previous 5 years. For Page Industries, they expect about 12.2% CAGR in revenue. For perspective, the last 5 years, it grew at around 8%. So that's growth. And not just innerwear, you have outerwear doing well as well, which they believe will see consistent recovery and growth. And one of the drivers for outerwear segment will be the company adding nearly 200 to 250, exclusive brand outlets every year for the next 3 years. And it is in exclusive brand outlets where outerwear sells more than innerwear. And outerwear, of course, has a higher value and higher margins as well. So these factors working for Page Industries.
I don't think I could have ever drawn that connect between Page and Nykaa in that creative way.
I never said, what is what. I just said one makes you look good, one makes you feel good. You make
the inside and the outside. Very well put. I mean, absolute full credit to you, Manglam.
Manglam, I'm maintaining silence.
I'll keep quiet too.
All right. But Manglam, all eyes on the test match as well. You think we have enough in the fuel tank? Bumrah is going to be leading the way. Can we knock the 10 wickets out?
For us to knock the 10 wickets out, you have to have some support coming in from Siraj and Prasidh Krishna as well, and maybe a couple of spinners getting a few wickets in, because Bumrah, all the heavy lifting that he's doing, his back is strong, but you want it to be supported by all the other muscles as well. So that's Bumrah leads from the front, but others have to support.
And I think we're teasing them with that target, right? It could look gettable if they go for it. Maybe, in fact, they'll make a mistake. And I know from all the years we've been working together, we're both optimists on Team India.
Always.
So let's hope by tomorrow we're celebrating this victory.
Let's hope that.
Thanks a lot for that, Manglam. Ashish, you heard what Manglam had to say with regard to feeling good, looking good, etc. But what's your view on both these two stocks, Page Industries and Nykaa? Do you like either of them? Would you stay away from them? What's your take?
Rigel, we are staying away from both these names. The reason being, if you look at Page Industries, it has been it used to be all-time favorite for the institutional money. But if you look at the current data, clearly at 60 trailing PE multiple, this stock looks little expensive for the kind of growth which it is witnessing. So if you look at the top line growth, it's in the range of 8%. The profitability growth is hardly 10 to 11% for last 3 year CAGR. So with this kind of growth, if you give a very high PE multiple in an environment where a lot of competitive intensity is coming in, it looks little difficult, for us to get a clarity about what kind of PE multiple re-rating or EPS expansion is going to take place. So we would like to stay away from the name at this point of time. So Page Industries is an avoid. As far as Nykaa is concerned, I think in the new age businesses, we are more comfortable with players like, Eternal or even Swiggy, where at least we know that, the burn on the dark stores has been coming down. In this quarter, we have seen a significant drop in the dark store additions. So this will ultimately lead to strong EBITDA margin and margin expansion. At least profitability is visible in next 3 to 4 quarters. So my sense is, if you want to really play the new age businesses, then I think players like Eternal and Swiggy looks more interesting.
Okay, so Eternal and Swiggy, when it comes to new age businesses, got that, Ashish. By the way, speaking of some more stocks in news today, let's pull up KPIT Tech. Now, KPIT Tech has been sounding cautious on its business. It did a mid-quarter update, and that update is not too promising. Stocks down 6%. Basically, they're saying that deal closures are taking time, ramp-ups are also getting delayed. So not sounding too impressive, and therefore the street has taken a cautious view on it. I don't know if you caught this or not, Ashish. Any interest in KPIT Tech? Anything else? I mean, overall also gives a view on IT if you are advising a buy on anything.
So overall, discretionary IT spending is in a trouble zone, Surabhi, because if you look at the global macro environment is still not very conducive. We are not sure about the global growth. Obviously, this will put a lot of pressure on the corporate spending, particularly on the discretionary IT spending. So this will make sure that, IT as a sector might, underperform. There would be outliers, maybe stocks like, OFSS, which is a proxy to the cloud transformation, could be a good play, or maybe a player like Persistent or Coforge, which are playing heavily on the BFSI segment. So at least these BFSI is a segment which is doing very well. So maybe these are the players which might do better than the peers. But overall, IT as a sector looks a little nervous, and particularly the ER&D players, because we have not seen meaningful guidance coming from the OEMs across the globe. So I think maybe it will take some time. So at least in the medium term, we are not very hopeful about ER&D stocks seeing recovery, and particularly stocks like KPIT, Tata Elxsi, they might continue to remain in a range.
Got it. All right. I wanted your view actually on the telecom space because Vodafone Idea, that stock is higher in today's trading session. This after Communication Minister Jyotiraditya Scindia had spoken out against duopoly in the telecom sector as the company's struggles continue. Let's listen in to what he had to say, and then we go to Ashish for his view.
Today we have fiber, we have broadband, we have Wi-Fi, we have mobile, and soon enough we will also have satellite. Our job is to provide as many avenues as possible, and within each vertical as well, provide intense competition. It's not good enough having a duopoly or one carrier or two carriers. You must have competition in every sector. India today is probably the only country in the world with 4 telcos.
Ashish, what do you factor in? The minister clearly says doesn't want a duopoly, so that would be good, some hope actually for Vodafone shareholders as well. What do you think? You have, the appetite enough, risk reward with Vodafone at around this 7 rupees odd, or will you stick to the large names, Bharti Airtel, Reliance Industries? Your take.
So Nigel, definitely we would stick to the quality names where the proven track record is there, and we know that the incremental journey is we are going to witness almost the ARPUs going up. So this will ultimately benefit not just Reliance or Bharti, even including the entire sector. But it's not about just ARPUs; it is about the market share gain due to different services which one is going to launch. And obviously, we believe that both Reliance and Bharti are in a position to have this kind of leadership position in not just the telecom, but also into the other services. And that's the reason we believe that we would like to be overweight on stocks like Bharti Airtel, where at least we have a very clear focus about ARPUs going up, and there's a market share gain which is continuously happening. So our topic in the space would be Bharti Airtel. But yes, this is not just today. We have been witnessing this trend where we don't want to have just two players, and that's the reason a lot of support being given to Vodafone, and even there's a lot of focus on BSNL to revamp BSNL. But eventually it's about the market share gain, and that's where we believe Bharti will take the lead.
Okay. All right. So that's a view on telecom stocks. Ashish, you give us some ideas when we've been throwing a lot of stocks and newsmakers at you, but it's an interesting market. I mean, even today, as I look at it, we started with such a flourish. It was the perfect day, but the index is not able to punch through the 25,200 kind of zone. What's the sense overall on the market? And, give us some ideas because mid-caps are still doing okay.
So Subhi, we are still very positive about market. Yes, we have seen some kind of intraday dip coming into the market, but eventually we have to witness that in the last 3-4 months, despite in India-Pakistan war, Iran-Israel, or crude prices going up, despite all this, we have not seen nervousness in the Indian markets. And also, if you look at the stability which rupee is providing, it gives a clear signal that markets are in a very strong hands, and we continue to have a positive view. Now, as far as sectors and individual bets are concerned, we believe that the entire financialization of savings as a theme would do very well. Since if the interest rates are going to come down, a lot of money is going to get into the financialization of savings, and we believe there are direct and indirect proxy to play this. So KFin Technologies is one play which we currently like because of its a kind of very strong leadership position. So KFin Technologies is something where we believe that a good 20-25% upside could not be ruled out from current levels. So this is one stock within the capital markets theme. MCX is one theme which we really like because we believe that hedging and gold, silver, these are going to be in a very strong uptrend. So there is going to be a lot of trading volume activity which is going to happen at this commodity boost. So I think MCX will continue to do well, and now electricity derivatives are being introduced in MCX. So this is again a good, I would say, optionality for MCX to get re-rated. This is one space we like. Individually, we like CDMO as an opportunity because we believe that if the overall pharma space is going to grow at 7-8%, then CDMO has a potential to grow at 17-18%. And within that, Laurus Labs is one stock which looks very promising, where a lot of capex has been done in the last 3-4 years. And I think going forward, we are going to see this asset turnover going to improve for a company like Laurus Labs. Technically, this is a 3-year consolidation breakout which is happening. So all this clearly indicates there is a decent upside which could be seen in stocks like Laurus Labs.
Got it. Okay. All right. Thanks a lot, Ashish, for joining in and filling us in with your take on all the stocks we discussed. Looking forward to having a chat with you rather soon. Tata Motors JLR, that's in focus because